Hello, everyone, and welcome into crushthestreet.com. I'm Kenneth Amaduri, and we got an exciting guest today. We're going to be covering the markets, the volatile markets at that. Tech stocks in the news, Facebook pulling back, Mark Zuckerberg, Tesla, AI. We got blockchain. We got a lot to talk about here. I have a brand new guest on the line with me today. His name's Peter Leeds. His website is peterleeds.com, and he's an educator. He's been featured on Fox, NBC, Forbes, Barron's, and he educates people how to make money in the markets. He's got excellent subscriptions. He's also on YouTube. You can find him there. Peter Leeds, thanks for coming on crushthestreet.com.
Pleasure, Kenneth. Anytime.
Peter, if you wouldn't mind, just give us a little background about yourself, how you got into the markets, and what led you to what you do today.
Well, you can't what I've found is you can't really learn how to invest well. There's no course, and nobody's going to invest well and then teach you how to do it. You're not going to go to a university to a university professor and they'll tell you here's what you have to do. So you have to learn yourself. And when I got started, I lost all my money in about 13 days, and that was when I was 14 years old, and it was a wake-up call. And so what I did then was I started studying how to do it the proper way. So I learned from all the masters in terms of reading their books, and I studied technical analysis from overseas, and I learned little bits of everything. And even if you read a book from, say, Warren Buffett, for example, I would read the book and I would disagree with a lot of what he said, but I would take what I believed and I would take parts of it out. So my investing strategy sort of became based on a Frankenstein approach of what I liked and what I didn't like, and I put it together, and that's sort of what developed our process, which is the Leeds analysis, technical analysis process, where we're looking at 29 points of every company to find really good quality companies at low prices. And then as I started doing better, I started sharing what I learned with other investors and trying to teach people to avoid the mistakes I made when I got started and to get up to speed really quickly.
What great advice there across the board. Take the best qualities, the best aspects of any situation, any person you meet, and try to apply that to your own life. And that's some advice I was given years ago, and I still do that today. Peter, so the stock market has been very jittery, a very volatile year, up, down, up, down. A lot of us were expecting a big correction. Tech stocks seem to be in the news as of lately, especially with Mark Zuckerberg and his hearings. We had Tesla, and it just seemed to kind of be this perfect storm that rocked the market here. So I'd like to ask you, what are your thoughts on the current market and, the tech stocks currently?
Yeah, well, if anyone's been following me on my YouTube channel, you're going to know my philosophy is that I absolutely believe we're going to see a pretty significant recession this year, and I don't think there's any way to get around that. But there's also a lot of, I would say, a little bit more bark than bite with a lot of what's going on right now with the tech stocks. So, for example, the Facebook privacy issues. This is great for the media, and it's shocking to people, and it's very important. I'm not saying it's not important, but I'm saying that you're going to hear a lot more about it in the media. It's going to seem like a bigger deal than the actual reality when it plays out. What's going to happen is that people are either going to forget about it or not care about it, and maybe a few will care, and maybe they'll cancel their accounts or change the way they do things, but the majority of people are just going to watch this go by like water going down a river. I don't think it's going to be anywhere close to as significant of an event or events, what's going on right now, compared to what people are expecting it to be based on what they're saying in the media and the way they're treating this, and they're covering Mark Zuckerberg's trial or testimonial as testimony. It's a big deal right now in the media, but I think people are going to forget it within weeks, months for sure, but within weeks it's not going to be a big deal, and I think it'll just be something that happened, and then people are going to move on.
Watching Mark Zuckerberg get grilled by these politicians, I had to have some empathy for him as a business owner, and just watching these non-business owners, these politicians on their high horse, just come down on him for this mistake. And I thought it was so powerful of Mark when he made his opening remarks, and then they had the chart on CNBC next to him. I don't know if you saw Fun with Dick and Jane, as Jim Carrey is trying to keep Enron or the company up, and it just started crashing while he's on live TV there. And Mark Zuckerberg, as he's giving his remarks, I mean, the market really liked it. And I thought he was so strong in the way he presented himself. And I mean, he had the weight of his shoulders. And I actually felt for him in that moment. And it really annoyed me with these politicians just attacking him, these non-business owners. And I don't know, any thoughts on that?
Well, I think some of those people who were questioning him didn't even have a computer, and let alone a Facebook account or understanding of this. And what happened was there was a shift where you see all the stuff on the media and you believe, oh wow, he did something wrong, and Facebook has got our data being sold, and everyone's worried about it. And then he gets up there and he's on the stand, it's on the media, and he's talking, and these guys, these older people are just questioning and grilling him. He became the victim and the hero, and everyone's starting to change the way they're looking at the situation. They're going, wow, they're really picking on this poor guy. And then he becomes sort of the hero or the leader that people are going to rally behind and stand up to the powers that be, that people are not too impressed with the powers that be right now as it is anyways for many reasons. And he becomes sort of a leader or an icon that's going to stand up to those powers that be, so to speak.
Yeah. And I'm into my privacy as much as anybody else, but it's just the way this whole thing played out. I had some sympathy for Mark Zuckerberg in the moment there. All right, Peter. So let's talk about the overall stock market in general. You mentioned a recession that we cannot avoid going forward here. How does that play and how does that trickle into the stock market?
Well, the recession is going to really have a problem. It'll have negative effects with the economy. So you're going to see that a lot of the businesses which make up the stock market are going to start having more troubles and starting to report losses rather than profits, and then that's going to start bringing the markets down a bit. I believe that the markets themselves are very vulnerable right now to a major correction. And I'm not talking about 10-20% correction. I think it'll be much more than that. And I have reasons based on all the analysis I look at. And people say, oh, you're just another doom and gloomer. I would say if someone's saying the market's going to go down year after year after year after year, you don't listen to them. But if you take a guy like me who's more optimistic than probably anybody I know, I always think the market's going to go up until I start looking at the data. And I'm in here late at night drinking coffee and looking at this stuff. Everything I'm looking at is telling me that this market's coming down, and probably pretty significantly. And my problem is that I'm always a little bit too early on my calls, but in the longer term, they generally prove out pretty well. I think that if you look at the Q ratio, for example, I have many examples. It's just the first one I found, so I'll say that first. The Q ratio takes the value of all the stocks on the stock market. It compares it to the cost to replace all the assets of all those stocks. And it only has approached 1.0 or higher on 3 or 4 occasions over history, going back to 1939. And every single time it's gone above 1.0, such as it went up to 1.6 in the dot-com bubble, but generally it gets up to about 1.03. Every single time it's been followed within a short time frame, short being half a year to a year and a half, sometimes maybe 2.5 years, where the stock market suffered a massive correction crash, the big historical ones, the ones that you hear about on the movies and on TV, and when people look back to give examples of a big stock market crash, the ones that they point to, that's when the Q ratio got above 1.0, and it just, you're looking at drops of sometimes more than 50%, 70%, in a short time frame, and I believe we're set up for that. And I have, that's the Q ratio, but I've got many other examples, other indicators I look at that are saying the exact same thing. And everything I look at, the more I look at, dozens of, data analysis points, they all suddenly are pointing to what could be a really difficult time for the markets. And if this recession plays out, as I expect that it will, no question about that in my mind. If it plays out like that, then this could be a really difficult time for stock market investors, and I think that things are already overvalued as it is. It's a manipulated market, and I could give you examples about what I mean by that and why. And I think that this is all going to change and go back to reality, and unfortunately this reality is going to be much lower prices for most stocks and a lot harder time for most investors.
Peter, let's touch on that then. You mentioned manipulated markets. Is it possible that we see another scenario and stocks continue to go up, $35,000 Dow Jones, and maybe touch on the manipulation if you would?
Sure. Well, here's the thing: if you take a longer-term chart, not a 2-year chart of any market, so we'll say the Dow Jones Industrial Average, there's a realistic or regular amount of trading volume going on, and then there's almost like a wall where it starts, where from the election of Donald Trump, that there's been a massive increase in trading volume across the board the entire time, and a big portion of that is central bank buying from the Swiss central bank has been buying trillions of dollars of stocks on our markets, the FANG stocks, and a lot of people, whether it's justified or not, as the election played out, everyone's got this sort of positive attitude towards things, and you can see on the chart that the stock market from that point, from the election, just roared higher in a straight line, which is absolutely unsustainable in any market. And now it's only finally now showing signs of breaking down. And people say, well, the market's doing well because you look and the stock market's gone up 200 points in a day. But if you look at it over the last week or two, it's doing a little bit better. But if you go back 1 month, it's down. If you go back 2 months, it's down even more than that. If you go back 3 months, it's down a lot. You have to go back to the sort of the tail end of what I would call the Trump rally to find that the stocks were lower than they are now. And people will tell you the market's doing well, but it's actually, if you look at the data, it's not doing as well. It's actually down over the various time frames. And I think it's beginning to sort of like a tipping point or a shift from where everybody was so positive, but there's a lot of manipulation in the sense of, oh, the earnings are going up, but there's a lot of buyback. So if you have 100 shares and you buy back 10% of them, but you have the same earnings, it's going to look like your earnings increased by 10%. And so are the earnings really getting better, going up, or being stronger? Theoretically, on a nominal value they are, yes, but are they on a total value? Is the company actually making more money? They're making it look like they're making more money because they have less shares out, and the buybacks are also what's helping push up the markets, plus the low interest rates, so people can take money for basically free because you're not paying a lot of debt on the interest rates, and then you can use that money to buy back shares. And part of the reason, or that part of the situation with this, is that the interest rates are now starting to climb a bit, and this is going to completely, put everything upside down. Home price affordability is the highest, affordability rate is the lowest it's ever been. It's harder for people to afford a house now, and as interest rates go up, it's only going to get worse. Debt's going to cost more, and there's all sorts of other problems with the economy that are making me concerned. And so am I a negative or pessimistic guy? I am not, but I'm looking at what I'm looking at, and I'm telling you that everything I know, and I'm wrong plenty of the time, but anything that I know, I am preparing myself for what's going to be a pretty tough ride for the stock market going forward. And I don't mean to scare anybody, because more millionaires were made during the Great Depression than any other time in history. There's so many massive opportunities right now, but if people are prepared, they're going to get burned. Your neighbor's going to get burned. His neighbor's going to get burned. But if you prepare properly, you can land on your feet and enhance your wealth and preserve your purchasing power. At the end of the day, this is going to happen either way. So it's not like you're hurting anybody by trying to make the most out of this bad situation. If you profit from it, then great. If so that's the way I look at it, and I'm preparing and setting myself up for that eventuality.
Yeah, Peter, I feel like change is happening now at a pace that is faster than ever. It's exponential, Moore's law to the nth degree, right? And to add to this, we have now artificial intelligence really starting to show its face and to take off. And I gotta say, I've read some pretty dire estimates out there that suggest that artificial intelligence can displace up to 50% of the current jobs in the U.S., and I'm sure it's similar around the world. And I think it's interesting because, it doesn't necessarily mean that it's not going to be replaced with another job, but for that current person who had a career as a truck driver, for instance, and now they need to go get another job. That's retraining. It's a whole new world of shift and artificial intelligence. What are your thoughts on this economically, and just any thoughts on this?
Well, I think that artificial intelligence will become a massive part of the economy going forward. But I would caution people, and I hate getting it to be, sounding like doom and gloom here, but I would caution people to be careful, because even if artificial intelligence becomes a massive thing, and I believe that it will, there aren't as many opportunities in that as people are expecting. If you go back to the turn of the century, there's over 1,800 car companies, automobile manufacturers in the States. This is just an example, but this has happened over and over again throughout history. And 99.9% of them don't exist anymore. They went bankrupt. And people who invested in the car lost their money. And the thing is, the automobile is still around. It's a great idea. People use it. There's tons of money to be made. But anybody who was jumping in there early saying, oh, it's a good idea, let's all get in on this, they lost. And that's the same thing with a lot of, all of these new technologies. And I think artificial intelligence is actually ways that companies can do better and reduce their costs and actually be more efficient. So I cannot, as a business owner and a businessman, suggest that we should do anything to derail that. I think that we should allow that. The reason that you can drive a car for $40,000 now instead of paying $200,000 for the same car is because the machines that put it all together, that it doesn't cost as much in terms of labor costs, and also because maybe it's being made in Mexico instead of the States. And I'm not saying this is good for the economy, but it's good for the consumer. And the thing is, if you go into Walmart with somebody and they're buying something and they're looking at different products, they're going to buy the cheap one. And the fact that it's made in China, they're not even considering that. And so then you say, okay, wow, China's taking all our jobs. The jobs are being given to China because people, the consumers, are voting at the store shelves by what they're going to buy. You're looking at two tennis rackets, and one's twice the price, but it's the same racket. You buy the cheaper one, and you don't care where it's made. And I think that's what the artificial intelligence will do. It will actually make companies more efficient. It'll reduce costs so that it'll make it better for the consumer. But at the end of the day, yeah, it's going to cost jobs. Is it bad, though, for an economy to readjust and have different types of jobs over time? I think that this is just progress, and this is maybe going to make a few jobs in the artificial intelligence industry. That will pale in comparison to how many jobs will be lost with artificial intelligence. So we have big rigs and trucks, autonomous trucks driving with no driver. Yeah, there will be less jobs, but for the drivers. But it's kind of a bad situation where I don't want the truck drivers to be losing their jobs, but this is the way it's going to go. And if we don't get on board with this train, what happens is that at the end of the day, your economy either falls behind other economies around the world because everyone else is going to be using this, or you just try and readjust or rebuild your economy so that you work around the artificial intelligence and you absorb it in and you welcome it. That's the way I look at it.
You know what? I've yet to hear someone bring that up, and that's a really good point. And that is, if you stifle innovation, someone else is going to move forward with it. And if they move forward, then the jobs and the technology, the resources will go that direction, and we stay behind. And that's a very interesting way to put that. And as a net, right, in a macro scene, that would be a very bad thing for the economy going forward. Yeah, no, one of the things that I mentioned to people, and I know we had that Tesla crash, which wasn't very good for AI, but when we have technology running things to a large degree and maybe running things more efficiently than humans would, maybe your plumber will be able to drive an extra 30 miles instead of having to deal with so much traffic in the city, because now the freeways move. Now the highways aren't as congested. And now people can live further away from the downtown, the city, to work. And, all of these different things, these unintended benefits to increase our quality of life and to increase the efficiency of the economy that technology will likely bring. Sure, it's going to displace and get rid of jobs, but there's also going to be efficiencies that improve, that make jobs even better.
Exactly. And one of my business coaches, Michael Gerber, He's a best-selling author of The E-Myth. He says that you turn your biggest obstacle into your biggest opportunity. And this is an example of that, where let's use this technology to really enhance and benefit the economy overall so that we can make things and sell things to other economies, even though we're going to lose some jobs of various lower level jobs. Maybe we repurpose the people, maybe we rebuild the way that we're going to do things so that at the end of the day, the economy is stronger and our country is stronger in relation to other countries. And at the end of the day, we're at the cutting edge of this rather than trying to adapt after, when all the other countries around the world are using, autonomous cars driving around their countries, and we're still stuck in the Stone Age. If it's going that way, it's kind of like if you didn't welcome the internet. Think about that. The internet would have cost a few jobs. The example I always give is, it's ridiculous that we're not on a flat tax system. No country in the world has ever gone to a flat tax system and then gone back, ever. It's so much easier, and it'll cost a lot of jobs for accountants and that sort of thing, but it's still a better solution, a better, more efficient way to do things, because then everyone can understand what they're paying, and there's less way to, cheat the tax man, and less loopholes, and more, it sheds light on the whole thing, and it's easier to understand. People know what they're going to pay. And it would cost a ton of jobs for accountants and bookkeepers, sure, but then there will be other jobs to try and help people understand the tax changes, etc. This is just an example. I'm not promoting or going against a flat tax. I'm just saying it's a good example of, it would cost jobs, but this may be the way that things are going to go. And in that situation, why not, adapt that or absorb that and go with it rather than fighting against it, because people are so afraid of change. Sometimes change can be the best thing to happen, and once the change happens, people go, okay, this is way better, and then they see it, but it's really hard to get them to that point. But sometimes, no army is going to stop an idea whose time has come, and this is what we're dealing with, I believe, with all of this stuff. We're at a very interesting time, Kenneth, where everything's sort of changing really rapidly, and it's tough, but it's also fun to try and keep on top of this, because things are changing so fast.
You're absolutely right. And that kind of leads me into my next topic here, and that is cryptocurrencies, blockchain technology. This is something we were fortunate to get involved with early, in its early stages back in 2012, 2013. We were part of a documentary we wrote and produced, Banker's Worst Fear, where we called Bitcoin Banker's Worst Fear, a little theatrical. But it was kind of in its early stages there, and we've been part of it, and it's something that I've been extremely enamored with. And we've gotten some recent news, interesting news, that George Soros is reportedly getting into cryptocurrency following the massive correction. I remember in 2016, he bought a position into Barrick Gold, and had a good position in that, and made some money in the run-up in gold in 2016. And, despite his nefarious beliefs and the things that he does and all the reports that he's involved with, he is a decent trader. Does this pique your interest at all? What are your thoughts on crypto?
Well, in terms of crypto, and I'm not a showy or a braggy guy, but this is the one time where I do brag all the time, is that I beat my record where I did 16 media interviews in one day about Bitcoin, not cryptocurrency, specifically Bitcoin, and it was really difficult. The reason that I talk about it is that I'm so proud of it, because I'm just impressed that I was able to do it. I'd hang up the phone and it's already ringing to the next one. It was all scheduled and everything, but I was barely getting the time to be able to use the washroom that day. And it was just interview after interview talking about Bitcoin. And the thing is that, I believe there's two different sides to the whole Bitcoin thing, okay? And recently I was on vacation and I just got up and I had to film a video because I said, I'm calling it, this is a top in the Bitcoin price right now, or talking about cryptocurrencies in general. I said it was a top when Bitcoin was at $19,600 per Bitcoin. And I said it's a top because of saturation and fragmentation. I can explain that more in a second, but I'm not against Bitcoin. I was just saying there's two different types of people buying Bitcoin, and there's a huge swell of people who don't even understand the technology at all. And I think, the blockchain, everything, I think it's wonderful. I think it's great. It's the way that the world's going. But there's so many people buying it because they see in the media that it went up in price and it went up in price and it went up in price. And so, I've got people who are like, I got a friend of mine, a firefighter, I don't even know if he has a computer, and he's asking me, should I buy Bitcoin? And I'm like, well, you shouldn't buy Bitcoin because you don't understand it. And so there was a huge swell of people who were getting involved in it just because it was like a mania, like a get rich quick kind of thing. And then that's what pushed it up to 20,000 at that point. And I said, okay, well, these people are going to start moving out of there. As I said, because of fragmentation and saturation. I have a video on YouTube about this. And I called it, I don't know anyone who called it as perfectly as I did, because it was right at the top. And from that point, that then the Bitcoin and cryptocurrencies just started declining and declining from then all the way down to about 10,000. And now people would say that, oh, I'm against Bitcoin. No, I'm not against Bitcoin. I think it's going to do great. I think it's going to go above 20,000. But the thing is, just at that point in time, it was a really, dangerous time to be in Bitcoin because there's so much swell of people getting in for the wrong reasons. And it was like a backdraft as they moved out of the cryptocurrencies. It's going to reduce that buying pressure. Now they've all been washed out, and now you can see Bitcoin is sort of leveling off. It did actually pretty well today. It jumped up a bit, and it's just sort of flat, like not flatlining. It's trading in a tight range around the 10,000 mark, give or take 1,000 either way. But this is a consolidation pattern where the people who want to get out of Bitcoin or who don't understand it are now moving on. And then the people who are getting involved now are newer investors into the cryptocurrencies, and they're buying that because they expect it to go up. And so there's not a lot of selling demand. There's a lot of buying. And so this is going to be sort of the opposite of the video I made earlier where I said it was at a top. Now I'm calling it that it's probably going to stay range-bound for a bit. But the fact that it's still around and hasn't disappeared, you can tell now that people are saying, oh, it's just a mania or whatever. It's all BS. But if that were true, it would have been gone by now. I think that it's going to be around a long time. But to go back to what I said earlier about all the automobile manufacturers, the problem with the Bitcoin and cryptocurrencies with the saturation or the fragmentation is there's so many of them. So even if you want to get involved, there's only so many dollars that are going to go into cryptocurrencies. You have to know which one you're going to buy, and there's hundreds and hundreds of them. So what I'm saying is going to happen is that a lot of the more marginal players will disappear over the coming years, but a lot of them will still be around many years from now. So Ethereum will be around, maybe Ripple, Bitcoin for sure, because that's not going anywhere. It'll be sort of like a representation of, it will represent, cryptocurrencies will be represented by certain ones, sort of like there's GM, Ford, there's certain car companies, but all the other ones are forgotten, and they cost people money. So you have to be very careful. It's a matter of now picking the right ones, and the ones that you pick, if they're the right ones, they're going to do extremely well.
Peter, is there any sort of valuation that we could give Bitcoin? I mean, people make comparisons to the stock market being in the trillions of dollars, or whatever it is. Trillions of dollars. The bond market, the gold market, what is like $8 trillion. Bitcoin right now is a little over 100 billion. And I'm just wondering, is there any sort of valuation that you would think would be fair over time to give Bitcoin? Do you expect it to go over $1 trillion in valuation?
Well, you know what, Kenneth, this is a hard thing for me because I am an analyst, and I usually am going to do a lot of looking back at previous historical data, and we don't have that with these cryptocurrencies. And like I said, it's such a unique time in the history now that things are changing so fast. It's very difficult to know how digital currencies are going to react to certain situations. We made a video about what happens to cryptocurrencies in a recession because I honestly didn't know. And on the video I said, you guys tell me your opinions because I don't know enough based on what I'm looking at. I can't tell you this is what's going to happen with something that has only, it seems like it's been around forever, but it's only a really short amount of history that cryptocurrencies have even existed and been in the public eye. So what's going to happen with them? I do not know. But I would say that you shouldn't value it in relation to other things such as gold. People are saying, oh, now cryptocurrencies are worth more than an ounce of gold. They're two different things. People who are buying gold are not the people who are buying cryptocurrencies. It's two different markets completely, and so it shouldn't be, one compared to the other. So, long story short, that's a long-winded way of saying that I don't know, but you can always, in investing, you don't have to know. You just have to be ready for any eventuality, and that's what I would suggest with cryptocurrencies. You might want to dip your feet in and keep an eye on it and watch it closely and learn more about it, and then maybe over time scale in a little bit more over time if you feel it's a good investment. There is a lot of risk and potential risk with this stuff because of the volatility, and also because we don't know really, just like the question you're asking, Kenneth, it's sort of like we don't know what it should be valued at. And there's a lot of arguments where if you say, okay, cryptocurrencies are going to go down, and people say, yeah, but what about this and that and this detail about the technology and this and that, and that's getting into the weeds. I don't think that the prices and the valuation of Bitcoin, for example, or Ethereum or Darkcoin are based on any kind of known and trusted analysis of what the valuation should be. I don't know how to do it, and I'm really looking for some of my followers to tell me what their opinions are, because I think this is going to be around for a while, cryptocurrencies, and I want to be on top of it and understand where it's going, but I'm having a lot of time. I'm not going to make a comment until I feel really certain of what's going to happen. And that's sort of like when Bitcoin was at 20,000, and I made a point of sort of coming out of my vacation to film this video to say it's fragmented and there's saturation. So what I mean by fragmentation is that there's one cryptocurrency, then there's 20, then there's 200, then there's 2,000, and eventually there's too many places to put the dollars that are going to go into cryptocurrencies. And then that's fragmentation. But then saturation is that there's just so many options that any dollar could go any of 100, 200 ways. What would be better and more healthy for the industry is some consolidation where instead of 2,000 or 3,000 cryptocurrencies, there was 400. 200, something like that. Those, sort of like, in twins in their mom's belly before they're born, one of them eats the other twin. You ever heard that? It's like it'll lead the twin to survive, right? If you could get rid of a lot of the excess and then sort of consolidate and focus on which cryptocurrencies have a little bit more legs, those cryptocurrencies, this is not a negative against cryptocurrencies, it's positive. Those cryptocurrencies would actually survive longer and better and be priced at higher levels if there were fewer choices. And that's sort of what sort of led me to understand exactly the short-term top in terms of Bitcoin when it came down. And I called it, I don't know anybody who called it as perfectly as we did. And I think that downdraft is now washed out a lot of people who shouldn't have been involved in the first place, and now you've got hardcore investors who understand the technology getting involved, and that's what it needs to have this industry continue to benefit and grow for years.
Wow. Well, Peter, I'm thoroughly enjoying this conversation. I hope the audience is as well. Peter, I want to get your thoughts on precious metals and gold. I sent you a couple topics that I wanted to talk about, and when I sent it, gold was at hitting 52-week highs, and today, of course, it's down a little bit. But what are your thoughts on gold specifically, and just the general economy as it relates to gold? Are you optimistic that we're going to see some big moves here in gold?
Well, Kenneth, the first thing I'm going to do is give you a disclaimer that I'm wrong plenty of the time, and this is opinion, not trading advice, but I believe, and I'm very heavily invested in gold. I own Barrick Gold. I own call options. I just sold some call options on Barrick Gold yesterday, made about 50% on them, and then I immediately rolled that money into longer dated call options. I don't know if you guys know about options trading or whatever, but I just expect that gold prices are absolutely unloved right now. I think that gold will be one of the best performing assets in the next few years. I think that it's going to explode in price. I think that we're going to blow past 2,000 without breaking a sweat. There's a lot of reasons for this, such as the decreasing U.S. dollar, the loss of confidence in the purchasing power of the dollar, the demand trends overseas for gold. Just because gold has been sort of, it's not doing badly, it's sort of exploding and it's not collapsing. It's sort of just like I was saying with cryptocurrencies. It's consolidating, and there's a lot of buying pressures going into the precious metals. I think that gold is going to spike strongly. I have physical gold and silver. I have mining companies in the gold mining industry. I've got trusts there where there's physical gold and silver that I own through that as well. I believe it's going to do well, but what I would say is that if you look at the silver to gold ratio or the platinum to gold ratio, those, both platinum and silver, are much more attractive than gold. I think that gold's going to go up a lot. I think silver is going to go up a lot faster in terms of a percentage, and the same with platinum. I think it will do really well because if you look at the silver to gold ratio, generally it takes right now it takes about 80 ounces of silver to buy 1 ounce of gold. But historically, the highest it's going to get is about 80, and the lowest it gets is about 30. And so right now I think that if gold goes up 10%, you're going to see silver go up about 20%. And if gold goes down 10%, you're going to see silver go down 5%. So over time, you're looking at silver and platinum doing better compared to gold, and I think gold's going to do really well.
Peter Leeds, everybody. Peter, first of all, thank you for coming on the show today. It was a pleasure speaking with you and being able to pick your brain here today. If people want to learn more about what you do and the services you provide, please let them know a little bit about what you're doing and the content you're producing.
Sure, yeah. Well, I mean, I'll make it easy for everybody. Just anybody wants to know anything that we're talking about, you just go to peterleeds.com, and through there you can find links to our YouTube channel where we talk about all this stuff for free for you guys, or you can go to, you can get our books or our learning tools, all sorts of free stuff, all sorts of paid stuff too. I don't promote a lot of the paid stuff just because I've told people before, I don't do this for money anymore. It's been a while since I've been sort of motivated by trying to make money from other people. I just want to help educate people. And if you think about how I got started, that's a big, driver of why I wrote a lot of the books I wrote and a lot of the things I do. I was a 14-year-old kid. I worked really hard for this money. I saved up. My friends are buying bikes and comic books. I'm saving up, and I go, how can I make this money, make more money? And I had, relatively small amount of money, but for a 14-year-old kid, it was all the money in the world. I got wiped out in 2 weeks. There's nobody to be there to sort of help me learn or educate me to protect myself and avoid the mistakes and stuff. And that's what I do. A lot of what I do is trying to help that 14-year-old version of myself. I want to help other people who are trying to turn a small amount of money into something much more significant, and that's what we do. And we just keep looking for opportunities and talking about things and make sure everybody's looking at the danger side of things and also where's the opportunity.
Excellent, Peter. Well, hey, you're a brilliant mind, and I appreciate your time here on crushthestreet.com. Thanks for coming on.
My pleasure, Kenneth. Anytime.